Morning, everyone. It's a pleasure to be here at the Resource Pro Summit. I'm Neville Moses, and I'm the CEO at Cloverly Specialty. Thank you. And the Chief Business Officer at NetShield. Cloverly Specialty is an ENS as a service a platform, really enabling those wanting to get into ENS. And NetShield is a SaaS platform offering policy, underwriting, claims, and billing, primarily focused on ENS and the specialty markets. I'm excited to be talking to you about a topic that is generating a lot of buzz in the insurance space and has been for a long time, the excess and surplus lines, or ENS for short. I've spent over a couple of decades in ENS with Scottsdale Insurance, Nationwide, and a few other insurance startups over the past few years, including MGAs. As we all know, the ENS market is a rising opportunity, full of promise, and that has been an ongoing theme for almost 50 years. And that's exactly what we're going to explore today. We'll delve into the dynamic ENS landscape, uncover the factors driving its growth, as well as how we can potentially capitalize on this trend. All of us are involved in the insurance space, and ENS is becoming a bigger part of the marketplace. Whether you're a carrier, an MGA, a program manager, or a retailer, the ENS market presents exciting opportunities for all of us. It's a sector that's evolving rapidly, and it's crucial to stay ahead in understanding how it has an impact on your business. By the end of the session, we'll have a better understanding of the ENS marketplace, strategies for navigating it, as well as the potential it might offer to your organization. So let's dive in and explore this rising opportunity together. $115 billion was the 2023 estimate of premium in the ENS marketplace. It's almost 12% of the $1 trillion in US P&C premium as of today. And it's about 25% of the commercial marketplace in P&C. Is anyone here new to ENS? Awesome. So let's dive in. I'll give a quick rundown of the landscape, and then we'll get into a few more details. Think of ENS as the complementary element to standard lines. Standard lines are admitted markets, which are regulated by states for both forms and rates. And anytime you want to make a change to your product with a form or a rate, you go and work with the state regulator to get approval. With ENS, you have freedom of form and rate, meaning that you get to define the product, you get to define your rates, as well as the forms as you take it to the market. And this flexibility is what makes ENS very unique in terms of the P&C marketplace. So flexibility also means expertise. ENS insurers and wholesalers are the specialists in the industry. They are operating with a level of complexity that, with regard to risks that they are insuring. So why is the freedom important? The freedom is important because they're dealing with risks that are different, right? These are unique and complex businesses. So it could be a company that's testing drone tech or biotech on the cutting edge, right? These are high risk, high hazard situations. So think about all the homes that are in the wildfire zone in California. The standard markets don't play with that anymore. You think about emerging industries. So a few years ago, cannabis or rideshare were industries that came into the marketplace, and the standard markets would essentially decline to write business, and ENS is where it steps in. So the products that are typically in ENS are general liability, property, professional lines, product liability, excess, inland marine, and cyber, as well as personal lines. There's been a greater move in the personal line space to having E&S carriers step in to provide that level of support. So where standard carriers say no, E&S carriers find that to be an opportunity to step in and meet the needs of the marketplace. And flexibility in terms of how they can define coverages and get the policy defined to meet the needs of the business is their superpower. And that's what makes a big difference when it comes to retailers and brokers who are trying to meet the needs of their clients in the marketplace. They're also specialists in their field. So the specialization that they have is unique to the class of business that they are writing. It could be that industry, as well as the region that they are in, because there are dynamics around regulatory and litigation elements that make it unique that they need to understand. And they also can operate with a level of speed. I'll give you a quick example. You can get an E&S company going as an MGA with nothing but computer and underwriter, and you can run that business on Excel. So there is a very simple example of a carrier that is doing about almost $500 million in premium, and they are managing all their claims on a spreadsheet because their accounts are so big, right? So when they talk about a $50 million book, they might have 60 accounts that they have to manage. So the technology that needs to play when these large side accounts is very different than what the standard markets need to play with regard to a lot of homogeneity with regard to the data that is required, which ultimately needs to determine how they do the pricing and how they establish their forms. So those are the big differences when it comes to the market. So before we dive into the opportunities within E&S, it's crucial to understand the challenges that are driving its growth. The traditional or the admitted market is facing a number of headwinds, and we'll talk about a few of them. Claim costs are one of the biggest challenges, and there has been a clear uptrend across the board with claim costs. And they are driven by a number of different factors with greater frequency and severity because of natural catastrophes. So we've had a much greater frequency around hurricane storms, wildfires, floods. And so there is also a much greater focus on social inflation, which is insurance litigation and larger jury awards. And then you also are dealing with greater medical expenses and legal costs. So they are putting a lot of pressure on admitted carriers. So many carriers are facing capacity constraints. And so when they are dealing with a capacity constraint due to their fiduciary responsibility and the regulatory nature of having the right level of capacity, surplus, right, in order to satisfy the regulators, they have to pull back from classes or markets where they're dealing with much higher loss ratios. So they're also implementing stricter guidelines. So those of you in the retail space, you probably experienced this. You know, you have had an admitted carrier write a particular line of business, particular classes. They've been doing it for many years. And then guess what? One day they're like, we're getting out of that. And so as a retailer, you're trying to now figure out, okay, how do I meet the clients that I have been writing business with for the last 10 years? We're also seeing a rise in complex and unpredictable risks. So the very nature of risk is evolving. We're seeing unpredictable risks like cyber attacks, and they can cripple a business. We're also seeing long-term effects of climate change. And we are seeing that the traditional model struggles to keep up with those rapidly changing risks. And finally, regulatory constraints. All the departments of insurance in every state are dealing with a lot of pressure to support their consumers in that state. And so they are also trying to balance that with the fact that insurers need to be profitable in order to stay in business. And so that level of complexity is adding a lot of uncertainty for insurers with regard to their ability to stay in the market as an admitted carrier. So we've seen the challenges facing the admitted market. Now let's talk about the solution, and that's where excess and surplus lines comes in. The excess and surplus lines is like a bridge. It connects the challenges of the marketplace, and it provides a solution that the market can bear. The complexities of the risk landscape have this as a critical alternative for many businesses and individuals. So if you take a look at needing coverage in order to run your business, and if you can't have a standard lines carrier offer that, your E&S option is your only option. And you can also get specialized coverages as you build and get into new businesses. So E&S insurers focus on unique, complex, and hard-to-place risks. And these are the risks that the admitted market can't or often will not serve. So the expertise and the appetite that E&S carriers have, and the E&S carriers, and we'll talk a little bit about the value chain where E&S business is written. It's carriers, program managers, and MGAs who all have underwriting authority. And that's really where you have the flexibility and the innovation. So in a lot of cases, the E&S underwriter is a lot closer to the risk than the standard lines product and underwriting teams. So they are able to adapt quickly to evolving risks and create innovative solutions. These solutions are tailored to the very specific needs of the insured. And so they are not bound by regulatory constraints on what's the form I can offer and what's the language in the form. So some of you heard of the term manuscript, right? So you can essentially create a customized form to support the needs of a very specific business that needs a specific kind of coverage. So the other piece is around capacity relief. One of the interesting things that we have seen over the last few years is the way that capacity, meaning risk capital, has been created and how it's allocated into the insurance marketplace. So you've heard of hybrids, you've heard of fronts. So when it comes to capacity, you're talking about having paper that gives you the ability to write business, right? So you need to be licensed with paper as an insurance company, and you need to have risk capital, right? So the surplus that you can then deploy to write business. So reinsurers step in. There are many other interesting and innovative ways where risk capital has been deployed. Some of them have been a little too creative, and we've seen a few of these hybrids and fronts really be challenged with their performance because of their lax underwriting capabilities and their inability to really pay attention to data. So another piece that we need to kind of take a look at is the need to respond quickly and the need to work with agility. So one of the biggest success stories in the financial, I would just say the capital markets, is a company called Kinsale. Some of you probably work with them. What makes Kinsale successful is their ability to respond very, very quickly to the needs of the broker, of the agent who is in the field trying to serve a client's needs. And that speed is symptomatic of pretty much every E&S player in the marketplace. And that speed essentially wins. So E&S is not just a niche or a last resort. It is a niche. It is also a last resort, but it's more than that. And so it has now become such an integral and essential part of the insurance ecosystem. And it plays such a critical part in providing the protection that businesses and individuals need here because of the non-standard risks that they have. So what's driving the growth in the E&S market? Several factors are at play. First and foremost is the complexity of risk. We kind of talked about that. So the complexity of risk is not going to slow down anytime soon. There is an increased rise of cybersecurity, of new elements around threats that are coming up due to tariffs, as an example, right? It suddenly upends a lot of business models that were established and were well into play. Traditional policies struggle to support those, right? Because for a So a typical cycle for an admitted carrier is you are required to file rates and forms, and then you typically have a 12-month cycle before you can get new data to say, I need to change with my rates or forms, which then the regulator obviously takes time before they can approve it. So your ability to respond to the marketplace is significantly compromised with regard to the element of speed. As an E&S player, you can make a change in one day. You can say, hey, I see a trend, I see a need, I see an opportunity open up, and I can put a form out there with the associated rates to meet the needs of the marketplace. One of the things that's very interesting about E&S is the tight collaboration between retailers, the wholesalers, and the carriers. Their ability to really understand where things are going with regard to trends in the marketplace on the ground is something that defines the speed at which they can respond. There's also the shifting demographics, right? And so societal trends. We've seen the rise of social media that have brought about significant reputational and other risks. Then the emerging tech and industries, obviously, we just heard this talk about AI potentially being a key enabler. There is a projection that the greatest wealth in the United States is going to be created over the next 10, 20 years because of AI and robotics. And that is going to introduce a whole set of new risks that we're not prepared to support and serve today. So what does that mean for E&S? So E&S will take a look at drone technology, robotics, renewable energy, and everything that AI is enabling, and then try and address the risks that businesses and individuals will face. But these are innovators, right? So the innovation brings about exciting new opportunities. But it also brings about unique risks that we are not facing today. So unique underwriting capability is required, and underwriters will evolve to meet the needs of the marketplace. So we can't ignore what's happening with the climate, right? So if you think about some of the states that have been impacted the most, any of you living in Florida, Texas, California probably have seen it firsthand with regard to property insurance and the ability or inability to get it from standard carriers. And E&S carriers definitely step in to meet that need. Now let's explore the value proposition of the E&S market. It's not about just solving for the needs of the insured and making sure that the right policy with the right coverages are delivered. But it's also really understanding who is involved in making this happen. Those are key stakeholders, and all of you are key stakeholders. And so if you think about the benefits to carriers, so carriers in E&S are domestic carriers, right? You also have Lloyd syndicates who are operating in fairly significant volume, and non-US or alien insurers. And then there's a whole mix of, how, like I mentioned earlier, paper and risk capital are assembled together to take new innovative products to the marketplace. It was in the late 1800s that the first E&S policy from a Lloyd syndicate was written because the standard lines couldn't support it long ago. So since then, it has evolved. And when you are a carrier or someone who has surplus, right, capacity, you're trying to make sure that your portfolio is diversified, that you're managing the risk and the return of that overall portfolio. So you might say, I am way concentrated on personal lines. I want to diversify into commercial lines. And then E&S obviously is an outlier where your ability to diversify into E&S and specific segments within E&S give you much greater control on how you can manage your portfolio diversification. E&S as an industry has typically outperformed every other market segment in P&C for the past many years. And so it gives the carrier as well as those who are involved in providing paper and risk capital a unique ability to fine-tune which niche areas that they want to play in. So they obviously focus on greater profitability as they work in that. The second is the wholesalers. So MGAs and wholesale brokers, program managers play in this space. And what happens with MGAs and program managers is that they typically have the pen, meaning they have the underwriting ability. They are able to make underwriting decisions with regard to pricing, as well as with coverages that are unique based on the agreement that they have with the carrier who has provided the paper and the risk capital. There are guidelines, but that dual delegated authority is pretty powerful because they are very close to where the action happens in the marketplace when a risk comes in for needing coverage from the market. And so the E&S market is able to provide very quick turnaround and give you the ability to focus on providing solutions that meet the needs of the insured. The wholesale broker is a little bit of a different focus. They are not underwriters, but they have a unique knowledge about the industries and the regions that they focus on. And they typically work on much larger accounts. So the wholesale market is the only way that a retail agent can access E&S. You can't directly access an E&S carrier. You need to go through a wholesale market. So they control access to the E&S marketplace. So the client relationships that are built between retailers and wholesalers, whether they are a program manager, MGA, or a wholesale broker, is crucial towards making the solutions that the clients need come to life. So finally, it's the retailer. The retailer is in a unique position where they are directly engaging with the policyholder. And so when the retailer has a need, they're trying to meet the holistic needs of the policyholder. But you also sometimes have retailers who specialize. They're going to specialize in a particular line of business or in a particular industry segment. And so their ability to then piece together the solution that the client requires, if they did it right, their ability to maintain a long-term relationship, meeting the needs of the client at a price point that they can pay for, is really critical towards creating success for everyone in the value chain. So it's a compelling value proposition, and everyone has a unique role to play. One of the elements around the E&S marketplace is, how do you navigate this? And what are the strategies that you would have in place to capitalize on the opportunities that it presents? So it requires a strategic approach. And there is a commitment to understanding the nuances of how E&S works. Let's kind of start with the most important thing, and that is to really understand how the E&S market works versus standard lines. And the market characteristics are unique. So the structure is different. Like we talked about, the value chain of how risk capital and paper is deployed to where it can reach the policyholder. It's a different flow of how risk is transferred for premium, right? You also need to understand that there are licenses and taxes required. So those who are in the wholesale space need to be licensed by every state. So you need to have an E&S producer license, surplus lines license. You also need to pay taxes. So if you are in any state, you're typically paying surplus lines taxes, and you're also paying stamping fees, right? So those are kind of typical. Those responsibilities are the responsibility of the wholesale market. They typically handle that. The carrier is responsible for maintaining the license and making sure that the paper is, quote unquote, authorized in order to operate in a certain state. It doesn't go through the same kind of rigor that an admitted carrier does, but you still need to get the licensing done in every state. Another piece that's important to recognize is that strategic partnerships are really critical. So, like I briefly mentioned, E&S, because of the way business is done and the uniqueness of policies, depending on where you are with the size of the account, when it's small and mid-sized accounts, what happens is you need a lot of automation and you need a lot of straight-through processing. And so these are accounts where I would say less than $10,000 in premium. A lot of tech is required in order to make that work. But when you're looking at large accounts and you're looking at customized policies, you pretty much need to have a lot of manuscript work done, and then customization of the coverage forms. And obviously your pricing is very much based on your experience. You don't have a rate book. You don't have ISO rate models that you can refer to. You are having to figure that out. And the only way you do that is because you are in a team that has done this before, and you've done this multiple times. So your experience as an underwriter, along with any data that you can get in assessing the risk, makes you get to a policy that is acceptable for the coverages that they're looking for. So when you're dealing with very large accounts, technology is not an enabler because technology has a lot of constraints. It actually gets in the way, right? But data is your biggest friend. And your data is very disparate in terms of how you need to pull that together. So when you think about having that set up with regard to getting your quote and your policy done, this is where operations and having the ability for someone like a ReSource Pro to support you with getting that work done becomes very valuable. The value of an underwriter's time is extremely high. The last thing that you want them to do is do anything that revolves around paperwork. And so if you can, if you're starting up an E&S operation, if you are looking at larger accounts because you have a specialization around it, and if you have the ability to manage access to accounts through the retail channel where you're getting business flow, your operations get to be a key part of your success. And so being able to effectively manage that is very, very important. So the special expertise that you need is critical, like we just talked about. Technology can be an enabler, right? If it's done right. For smaller accounts, it is critical. You can't survive without it. Larger accounts, it's a huge add-on. But data and the analytics that go with the data is really important. One of the things that E&S carriers focus on is their ability to manage data at the point of transaction. So an account comes in, right? You're trying to underwrite it. You're assessing the risk, and you need supplemental data to help you make that decision. And I think there was a conversation about having all the data at that single point of glass for you to make a very efficient workflow to make your decision come together as quickly as possible. So efficiency, communications between multiple players in the value chain as you kind of get that policy done. Speed, obviously, is another key part of making this work. Really having a client-centric approach, making sure from an E&O standpoint that you're able to manage communication across the value chain is equally important. So what are the challenges in the marketplace? So one of the first is higher costs. Because there are more mouths to feed in the value chain, you have a higher commission structure. We just need to recognize that. And so the other is market volatility. One of the things you'll recognize is that the standard lines carriers will step in and step out of classes and markets because of the performance of that particular market and class. And so E&S carriers kind of do the exact opposite of what carriers are doing. If an admitted carrier comes in, E&S carrier will exit. When the admitted carriers leave, that means it's a harder market, and so E&S carriers get to play. Making sure that you have the right financial partners is important, and managing regulatory uncertainty. We talked about regulatory issues that you're going to be dealing with. Expertise with regard to knowing your classes and your knowing your classes as well as your regional differences in the marketplace is very critical. All right, so let's kind of talk about how do we overcome some of these challenges. Risk management and data is really key. knowing the market and the product, really understanding it down to, so if you think about NAICS, it has about 1,200, 1,100 classes, right? E&S carriers will take that and then take a smaller segment and then further segment it into a much finer granularity in order to get very precise with the kind of business that they want to write. Having the right partners in place across your entire operations is important, and knowing who you're going to be working with in the marketplace. And one thing that we need to recognize in E&S is that you are always having to understand technology and data and knowing how marketplace is changing, because there are new opportunities coming up all the time for you to take advantage of that. So what are the trends that are shaping the market? So the future is bright. It's filled with exciting opportunities for those who are prepared to embrace its potential. One clear trend is continuous growth. The E&S market has never shrunk over the last 40, 50 years. And so there are capacity constraints, greater risk complexity, and newer industries and tech that really comes into play. Increased specialization is going to be important. So if you are in the marketplace, if you can specialize in certain segments, especially where there's growth, you're setting yourself personally up for success. And there are more tailored and effective coverages that will be required. Automation with regard to technology, analytics, AI, and machine learning will be important. So collaboration with the entire value chain becomes equally critical for your success. And I would say you ultimately want to make sure that the globalization of how supply chains and even how companies are operating is another important piece for us. So that's kind of the formal portion of the presentation. And we have, if you have anything specific to ask, look me up, and I'll be happy to answer any questions. Thank you again for your time and for this conversation.